Also a very key thing, the shiftment of stop losses. It's also, it takes a skill to shift stop losses. You don't just shift, but it takes a skill. So now we are now looking forward to. So the analysis, I think it's still the same. The analysis is still the same. The analysis is still the same. Still the same. We are in a bearish market. This is a bearish market, and this area here from that key level to this one, it's a sort of like a range where price is ranging. So the breakout of this range, as well will signify more selling opportunities. I think it will happen either at the end of this week or next week, whatever. But the break of this range to the downside there, it will signify selling opportunities to the next key level, which is this one. So that is also another opportunity that can happen that you also need to keep in mind in the future. That can happen either next week or this week, depending on the movement that will be happening. So once we get to the bottom of the range, every range has a top and a bottom. Top of the range, bottom of the range. Bottom of the range we buy, top of the range we sell. But according to the market structure, which is bearish, we are coming from a bearish market structure, then the range, most probably the market will break and break to the bearish side of things. So you actually need to be careful as well. When you're trading a counter trend, these buys, all these buys that happened, they are opposing the main trend, which is bearish. So when you're trading a bullish, when you're following a counter trend, what I advise you to do is always to have your normal risk. You need to have your normal risk. You will need to have your normal risk on those trades. So these buys, I was expecting you to take them, but with your risk halved. You are halving your normal risk. Then when you are following the main trend, which are the sales, that's where you go back to your normal risk, because that is the main trend. That is the main trend. So now,
okay.
So now we can even have a trend line here at the top that can even guide us for entries. If ever price gets there, you can even have a trend line there at the top. So this trend line can also help us with entries in the future, whereby price can come to this support, then bounce off maybe to the trend line, then come back down. So that trend line is also to give you entries in the near future when price comes back up there. So right now, price is currently at almost at a key level. That is a key level. That is a key level there. So that key level now, what we do is simply wait and see the response of price to that key level. We simply wait and see the response of price on that key level. Whichever way price is going to respond to. If it breaks that key level, that would be amazing. Simply want a pullback, then we go all the way to the bottom of the range. That would be good. That would be good. That would be good. So there you simply wait for, if you check here what happened, it broke, retested, you could have entered on the retest. You would have made a little bit of money there on the retest. Then it went back up again, retested, you could have made money, but then here now it failed to give a rejection here. You're not supposed to enter there. So you were supposed to enter after price now came back in the zone, which was here. After it came back here, when after a fake out like this, whereby price goes out and comes back in, you don't need to wait for a retest to enter. You simply enter there. Then it goes. So here now, I'm simply expecting a break in the retest, then we go. Break, retest, then we go. Break and retest, then we go. That is first case scenario that we are looking at. Another possible scenario, it's also whereby price might go back up. That is also another possible scenario, because whenever we are going up or down, there are patterns that happen. For example, if you check here, before it went up, it came back down. It coming back down, it was simply coming back down to form a double bottom. A double bottom, it gives a solid foundation, a solid base to push price higher. Same as here. Here, we don't have a double top. We don't have a clear double top. One can say this is a double top, yes, but it has to be somewhere like this. This is a more stronger double bottom than these ones like this. So we can get either a double top, either a head and shoulder. These are strong patterns. These are very strong patterns. Either a triple top as well. All these are patterns that can happen before price pushes whichever direction it wants to push. But if it doesn't happen, if it doesn't come back all the way, maybe to the upside, whether to form a double top or to form an inverted head and shoulder, it's still okay. It's still okay. We are not worried about that. If it comes there, gives a shoulder there, a right shoulder. So there, what you do in a scenario like this, your cells, you enter them there upon the rejection there, then others, you enter them there after the break of the neckline, then your target is here at the bottom of the range. That is how you can deal with head and shoulders if ever they appear. So what you now need to know now is what we are going to be doing for the day. If you check yesterday, the whole of yesterday, we simply have been holding cells. We simply have been holding cells. So meaning yesterday, it was simply a selling day. And if you check the cells, they had little retracements to the opposite side, little retracements to the upside, little retracements to the upside. So here we are. So now these fainted levels, they are also mini key levels also. These fainted levels, they're also mini key levels. These ones in blue here, these are the major key levels. These ones in gray here, they're also minor key levels. Minor key levels, major key levels. Then these ones, they are simply mini key levels that I'll be seeing. Then these yellow zones are simply zones of entry. These are simply zones of entry. So that is how I have managed to be consistent with my chart, to make sure that if I draw this, I actually know that this is what, this is what, this is what. So same thing on your side, you also need to compile your system as well and do your own thing, whereby you draw your major zones in a certain color, your minor zones in a certain color, your mini zones in a certain way, your entry zones in a certain way. That way it shows that you know what you're doing, and as well as you are aware of everything that is happening. So nothing on my side, there's nothing new that can happen on VIX that I can be shocked of, that I can be surprised of. For example, right now, there's no scenario that can happen that I may not be ready for it mentally. I'm always ready for all these different case scenarios. So now, what one can do now is simply to wait now for, it's simply waiting time to see how price is going to respond to this key level. Is it going to break? If it breaks, Simply wait for a pullback, then boom, you join in. You join in all the way now to the downside, all the way to the downside. Or is it going to go up a bit before coming back down? Going up maybe to back to the trend line. Is it going to go back to the trend line? Just somewhere here, then come back down? It's also possible. So if it comes back to the trend line there, if you get a rejection to the downside, you can even sell. You can even sell. Then you see and wait for the reaction of price on this zone. Then now, if price does not break our key level, we have this downward channel that I drew here. So this downward channel, it's there to simply guide you to say your sales are safe, your sales are safe. So all our sales inside this channel were safe. All our sales that we took inside this channel were safe. Outside the channel, we look for the opposite, which are the buys. So meaning, if ever price comes to the key level, fails to break the key level, but rather breaks the channel, the downward channel. If ever that happens, if ever it breaks this downward channel and retests like that, you simply can take buys. So this is buys now. You now need to make sure that, because you are aware that it's a counter trend, you simply need to make sure that your risk now is halved. You don't take the normal risk that you take following the trend, but you simply halve your risk. Then you take the buys, you see how price will react. Then the next major area that you'll be looking at is this area. If price breaks that one, you're simply looking at the key level. So either it will be that, or the other way around. So all those scenarios are possible, and we're ready for them. You simply now wait and see the response. So the reason why you need to have these setups with you always is so that you also monitor on your side. When we are entering, you also need to monitor on your side. Why did we enter here? Which area did we look at? You also see the area on your side, because if you're only looking at my chart, you're always going to get that much. But if ever you also have a lookout on your own chart there, it will help you to even grow. Next time that you see a possible scenario, you see the same case scenario on your chart there, you can even enter trades on your own there without waiting for a signal. So for VIX, that is the current expectation, the current lookout for the day. We're simply waiting for the response of price on the key level, or the response of price. Is it going to break this downward channel, or is it going to continue? If it continues and breaks this key level, it will still be good for us, because we'll take more selling opportunities after the break of the key level. So that is the current lookout. I hope it's clear.
Yeah, it's clear. It's clear.
Yes, so that is it. So that is it. So whenever it's, let's say it's going to maybe reverse to the upside, it also needs to give us some signs of reversal. Signs of reversal are something like this. This is a double bottom. This is a double bottom. It was going down, made a double bottom, then boom, shoot up. So signs of reversal can happen even here, whereby price comes. That's a sign of reversal. Sign of reversal. So you enter outside of this downward channel. In the outside of this downward channel, the buys, the sells below the key level there. So those are your two entry zones for today. Outside the channel, you're going to buy. Below the key level, you are going to be looking for, to be selling.
All right.
Uh-huh. So that is it. That is it for the VIX. So this is how I mark my areas. This is how I mark my areas, and I even write potential sales below here. So doing this, I even know, even if I go away from the chart and come back, I even know what to do. If I see price below this area, I know that possibly I'm looking for selling opportunities. If I see price below my area here, I will be looking for selling opportunities. So once we break this downward channel, that's when we look for possible buying opportunities. Possible buying opportunities. So those are the two entry areas of today, below the area, below the key level, and outside of the downward channel. Those are the two entry points. Anywhere in between here, don't attempt to take any trades in between here if you don't know what you're really doing. If you don't know what you're doing, and in between here. So right now it's currently, we can say it's a non-trading zone, non-trading time, basically. We need to aid the price to break this key level, or take sales. Break this downward channel, will take buys. Those are the two things that we are looking at. Two things that we are looking at. So anything in between, just leave it. Just leave it, because the major moves have already happened. The major moves have already happened. This was the first one, retracement, second one. So these are the major moves. Major moves have already happened. So that's where you were supposed to make money, either there or here. This is where you're supposed to make money, on the sales there. The next one will be after it breaks this key level. That is where we'll be looking forward to the continuations of the sales. So we are looking forward to that. Entries below this level and outside the downward channel. So that is it for the VIX. Nothing much to talk about. Nothing much to talk about there. Any questions? Any questions?
Yeah, I don't have questions.
So I hope it's clear. Mind you, are we together? Okay.
Yes.
Yeah, that's good. So that will be the current lookout. So you have your own setups. Even if you have a different setup, it's fine. We'll look at that and we'll comment on that. It's okay. Even if it's okay. Oh, it's still okay. You understand? So all we want to see are setups from your side. This is my own setup. If you can copy and paste, okay, it's fine. But you have something also that you can show us. You have something to show us. Say, hey guys, I'm seeing A, B, C, D. If this happens, we do this. If this happens, blah, blah. Same thing that we're talking about. Because that thing, it will help you to grow the skill on your side. You get my point?
Yeah.
Yes, so that is it. Let's see your setups in the group. Let's see your setups. You have your setup. Let it make sense to you first before you send us. Let it make sense to you. Then you send us, you explain your setup. Simple. Then if ever there's anything to correct, we move on. You do like that every day you do like that. You improve. So send your setups, then we will take things from there. Send your setups, then we'll take things from there.
If you know.
Yeah.
Okay.
Send your setups.
Okay.
Let it make sense, please. Let it make sense.
Okay.
Yes, so that is it. That is it. That is it. That is it. We are simply now waiting to see the response of price now to the areas that we mentioned.